I need someone to type something, okay? Hello, Pan on Fire. I haven't seen you for a while. Which is a lot different to last time, right? That was a complete and utter nightmare. Right, now, as you all, well, those of you who've been with me before over the last 2 years, what we're going to do, we're going to take a look at the markets as we see them going into end of July, you know, beginning of August. Now, we do have a bit to say, or I have a bit to say about currencies, but I think I haven't got very much to say about the euro at the moment, to be fair. But what I'm going to look at, I'm going to look at the stock markets first. Is that all right with you guys? Okay, well, look, you can all see this chart of the S&P, can't you? Okay. Now, if you look at this chart, as I move the mouse over, you can see what I'm doing. Yeah. You can see we made this head and shoulder top, okay? And down we've come, and we hit the 61.8% fib level right there at 2035. And then we bounced, and we bounced back to 2073. Now, this is on a daily chart. You can look over here and you can see that although we've bounced quite strongly, our stochastics haven't, which is going to tell me, or does tell me, that the market is due to go even further lower. I mean, the farther out you go in this market, the worse it looks. It really, really does. If I take you to a weekly chart, okay, that's the scale of what we're up against. We're up against something that we haven't seen in a very long time, and that's the topping pattern in the S&P. All right? Now, this has repercussions through every market that we're going to be trading. It really does. So we have to keep our eye on the oil and the stock markets in particular, and gold and the commodities more than what we would usually do. Now, as you know, normally in the summer, there is an old saying that we say, and it's sell in May and go away. Now, that has been true in this market, but it's looking pretty bad. If I take that off of there and reinstate them on the weekly chart, you can see exactly what we're looking at. Doesn't look very good, does it? At all. Now, are there any questions you'd like to ask me? Pan on Fire, it's not like you to be quiet. Normally you're like there in amongst it all. Okay, now look at this level here. It's quite important, okay? This is the 2029 to 2036 area, all right? We see a break of that area, then the market is really yeah, it is. Is the US dollar at the bottom? Not at the moment. No. Oh, you talk about the euro? Aussie? No, not at the moment, but it will be recorded. Okay, so I'll go into the Aussie later, just for you, okay, as you've been really nice to me over the years. Right, so you can see where this is, okay, no problem, you go. You can see where this is leading us. Now, wherever we go, whatever chart we are looking at on the S&P, it really doesn't look any different. It looks like it's an accident waiting to happen. Now, the other market that is quite interesting would be the NASDAQ. Does anybody look at the NASDAQ, or should we just go into the Dow? You can see where the Dow made an absolutely spot on head and shoulder top here. And the thing is, the break that we've seen, and we will see it continue lower. If I take these fib levels off here, okay, and put them back on here, you can see that we've got still quite a way to go. So our minimum target that we're looking for on the Dow is 17,390. Okay. Now these are the stock markets. I've done the stock markets first because of the importance that they have been doing over the last couple of days. I don't see there being that much of a retracement correction in the stock markets before they start to fall again. Anybody got any questions on the stock markets before we go on to gold? Or are there any other stock markets you want to look at? The NASDAQ, which I haven't got on this one, was actually the one that led the way first. It was an absolutely amazing. I think, yeah, I mean, look at them. I've seen more bullish charts in my life, and that isn't one of them. Look, you've got a double top, you've got a perfect head and shoulder formation, you've got a break of the neckline, we've got a retracement back to the 23.6. You know, it's below every moving average. Even this one is like capping the top side. There is nothing to suggest that this stock market is going to go up in any way by a great deal, and if it does, it will just give you better levels to sell. You've got yields on the bond markets going at record levels lower. You've seen the 10-year Bund reach higher, the 10-year note, the 30-year, which, all right, we don't have a lot of volume in the 30-year, but all the bond markets are showing this flight to quality. So yes, you are looking to buy dips in bonds, sell rallies in stocks. I think we might have seen the end of the rally in the stock market, but we know in the summer, stock markets have this wonderful thing of wanting to trade a lot lower, all right? That's just the way the nature of the beast is. That's the way it goes. Now, would you like to see, is anybody interested in gold, or do we want straight to go into the currencies? Gold's quite interesting, guys. So, you know, now this gold Techical, great. The way I do these webinars is I very much have interaction, okay? I don't preach, I don't go and do your presentation, blah, 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 on PowerPoint. This is your chance to ask me questions about what markets you want to look at and what markets you would like me to show you and my view on them. Okay, so that's what we're going to do. So we're going to do, yeah, we'll look at the CAD as well. Oh, DAX, leave me alone. I'll show you the DAX. The DAX, okay, is going lower. I am just not a DAXy person. But look, this is what I'm going to show you. Okay, now, We know gold looks awful, all right? We do not need anybody to tell us gold looks awful. We look at a weekly chart and we can see just how awful gold looks. However, look at this. In November, okay, we reached lows. That was November last year. We reached lows of 1132. In March, I remember it so well, 1142. This time round, we've reached 1146, 48 area. Now we're going to do currencies. We're definitely going to do currencies. But I was asked for gold. I'm going to briefly, I'm going to go over it, but very, very briefly. So Terry, shush, watch gold first because it has an impact. You've got to imagine they all have an impact, all of them. All right, they're all correlated. Please don't think they're not. They are. So you see how we're getting these higher lows now. The point where gold really starts to look interesting is in a break of 1142. Once we break that, we are definitely, most definitely going to 33. But more importantly, if you look at the on a monthly chart, we have that level there, 1029. Written all over it, where we double topped way back in 2008, 2009. Do not run away with the idea that gold can't go down there, because it really, really can. Okay? Look at what we did here. No one thought, well, maybe I thought a little bit, but no one thought that we would be down here, up here. So this is what we're doing. We're making this sideways, and I think this has just been a continuation pattern, and down we come. All right, this will affect everything we look at. So we're going to go to the dollar CAD. Apparently, is that the one we want to go and have a look at? We will do for Pan on Fire. I have to do the Aussie, and the Aussie's pretty good as well. So let's have a look at a dollar CAD, our dollar CAD chart. Okay. Now remember the last time we spoke about the dollar CAD, and it's been, I think it's been quite a while now. We'd seen this top, we'd come down, we'd and we were looking, for the market to top out. Now this was on the back of obviously lower oil prices. Now we're reaching a big resistance area here. If we can stay below 128.30, okay, 128.30, there's no reason why we can't come back to the 125.5 area. All right, if we look at the weekly CAD, still going up, guys. All right, but for the time being, below 128.31, we will see a pullback in this down to the 125.50 area, and that's really where we want to go in and buy gold. Where we want to go in and buy dollar CAD. Is there any questions anybody wants to ask me about the dollar CAD? There is a thing in technical trading, technical analysis, whatever you say, is that double tops and bottoms hold, triples rarely do. Okay, so I do think if we get up and we do break the 128.30 area, you're looking, I mean, there you go. I have to go back. Can you all see that? Let's put that on a monthly chart. That's going to look a lot better for you. So do I think the dollar CAD can break 128.5? Yeah, I do. Look at it. I mean, we've come from here. I know it's a long time ago. There is no reason at all Well, we can't go back to here, okay? And there you go, we're near enough at 131, 132 area. So yeah, I do. I do use oil because the CAD is very oil driven, all right? So as oil falls, the Canada falls with it, okay? Same as Brent. When Brent falls, you've got sterling that falls with it. They are very much intercorrelated as well. So definitely, I don't use oil as a reference for dollar CAD, but I do know the correlation between them, and it is immense, and you cannot ignore it. You know, it is what this is what drives the markets. The lower the oil, the lower the CAD. So the higher the dollar. Are they positively? Well, do you know what? You can't be positive about anything, really, can you? Because they do decorrelate at times. You know? And there are different time frames. I mean, if you look at that, we go back to like 2002. I can't tell you where oil was. I mean, I can put up an oil chart with you. But when we got to this here, when oil went to 147, then puked to 32, we had that correlation within the markets there as well. So you can't be positive about anything in trading. All you have to do, you have to look at what the markets should be correlated to and see if they are correlated. And at the moment, they are correlated. It's correlated to the Brent. That's the North Sea oil to everybody else, all right? So when Brent goes lower, sorry, can't you hear me? Because I've had to turn the fans off. I'm like swishing myself around because I'm absolutely boiling in this office. So yeah, when the Brent goes lower or higher, you know, cable follows. It's not the only reason, but it is a very big part of it. We are not seeing the not flight to quality. That's not, we're seeing that in the bond markets. But normally you see if the currencies are getting hit, they go into gold, and we're not seeing that. We used to see that, and that decorrelated, and now that's going back. Currencies are going down, gold's going down. But you've got to watch that 1142 area. It is a massive, massive area. So I think we're finished with the CAD. What do you think? You think we can go lower? I think we can. For those of you that like the candlestick charts, I'll just put that up there for you. Yeah, I mean, it does look like it can go some more. If you put the fib level on the monthly chart, I know we're going back a long way, you know, but there's no reason we can't go back above here. Look, on the pull down, we didn't even get anywhere near close to the monthly 38.2 level. So I don't see any reason why we can't break that eventually. Look at oil, see what oil does. Look at 128.30, that will be your key. All right. So what next do we want to look at? I have to listen to you lot. You want to look at the Aussie? Fantastic. We like the Aussie. You're not going to like the Aussie when you see it, but we do like the Aussie. Do you know what? I wish you all had names I understood. Right. Aussie dollar. Is there a base yet? in the Aussie dollar. Let's take that from a weekly. We've still got the same amount of information. It just makes it a little clearer on the chart. I personally can't see a base in the Aussie yet. I can see it correcting. Without a doubt, I can see it correcting. But I think once we broke 92 area, if I put that on there, oops, don't want them. Right, get off. And we put on our stochastic. And now we get two of them, which we didn't want. Okay. Now the Aussie, I'll just leave that for a while. The Aussie, there is absolutely no reason we cannot go down to this level very, very quickly. All right. Now the Aussie, that is 70.89. I hope you've all got your pen and paper. You write all this down. Okay. The Aussie isn't looking great at all. Now, that is a currency that is very closely correlated with gold. So this is why I say to you, gold, 1142. I cannot stress it enough. Enough. If that gold breaks 1142, Aussie will go into free fall. All right? Now, if we take it back, let's not do that. Let's take it back to a more shorter term time frame. All right. Are we overdone? Yes, we are. So, where can we retrace back to? Where would be a safe place that we can actually look again to go short of the Aussie? If you look at that trend line that I drew, can you all see that trend line? Guys, I need feedback. Otherwise, I think I'm lost. Yes. Oh, hello, Pete. Right. You need to talk to me, okay? Because I've been losing, because it's so hot in my office at the moment. Spain has experienced a heat wave, and I've had to turn the fan off. And, right. Any retracement. Now, you can see down here, all right, if we look at our little indicators down here, we are not as oversold as we are there. So we are seeing what we call divergence. We've been through divergence before. Oh, but I am the host. Hey, I'm the host, and I haven't seen anything from you. No, I'm definitely the host. Yes. All right, I'll ignore you. I'll just put it down to that we've had a very long day already, shall I? And you're keeping my eye on the dollar Swiss. Anyway, just ignore me. Right. Back to the divergence. Purely for Pan on Fire, who really I can't nickname Pan, but who has disappeared off to a meeting. Yes, we can. We can change, and we can move back to the break point of here. Okay? Now, obviously, the farther out we go, the more that trend line will move. So if we look at, say, between, this won't change unless we make a new low. So if we say between 75.60 and 76.30 is where we would love to go back in and sell the Aussie. Obviously, if gold holds that level I was telling you about, it has held it because we're trading at 11.60 and we've been to a low of 11.47 already today. So there's no reason short term that the Aussie can't correct. Now, we can see if we take this back a bit, look, you know, It's up and down, up and down, up and down. I mean, I've traded the Aussie for many years now, more than I care to remember. All right? So I know that markets don't go down in a straight line. They consolidate before going down again, like we did here. You see where we made that base there, just in front of that. That's how we could draw that trend line in. Down we came again. Now we've got 1, 2, 3, 4, 5, 6. This is our 7th lowest day. Day lower. Right now, at some stage, as we've seen divergence at the moment, I think that the Aussie is going to correct. But I don't see it going back up to 76, 75. I think it's going to hold that trend line. So you need to be ready. 75, 60, 76, 20. You're going to be selling it. Are there any other questions on the Aussie, please? Come on, I've only got 15 minutes left. You must. How do I see a reversal signal? Reversal signals show you, do you know what? I see them because I've been doing it 33 years. Right. So, let's see this one here. Okay? Up we go. Make a new high, close lower. We don't close below the previous day's low. But look, we were so strong, and the failure to break up above there really did tell you, that, you know, maybe we were not going to go up for the next few days. We actually came all the way back down. Reversal signals show themselves in many ways. What do I pick? Stochastic or RSI? I look at both of them. And stochastics have diverged. The RSI hasn't as yet. Okay? The RSI is low, but if you think of what the RSI is, it's a relative strength index. So the stronger the trend, the lower the RSI is going to be. And what you're looking for, if you're looking for an RSI, is a turn in the RSI. So at the moment, the RSI is pointing down, okay? But your stochastics here are showing, one, that they are diverging, reference here, and two, that the blue line is going to cross the red line. That's the most basic thing I can tell you. Now, if we close higher today, say we close up around, where are we trading now on the Aussie? We're trading on the Aussie 74.19-ish, okay? So say we close up above the daily high, which is 74.59. That will be seen to me as a reversal sort of signal, if you like. It's like it made a new low, couldn't sustain it, going up. You can pick double bottoms, head and shoulder bottoms, descending wedges. There are a rake of top and bottoming patterns out there. What you have to do is to try and decipher what ones are relevant. You know, like the head and shoulder on the Dow and the S&P were obvious signals that the market was going to trade lower. Our technical indicators have just confirmed that. So I use both. I use the stocks, the RSI, and the MACD. Now, I do not have enough time to go into the MACD with you. That'll have to be for another day. Now, as I say, I don't have much time left. I've got about another 15 minutes. So what currency would you like to look at next? Or are there any other things that anybody wants to ask me about the Aussie? Short term up, medium term down. Kiwi. Oh, yes. Okay, the Kiwi. I do want to say the Aussie. do. Well, now we are seeing a correction back in the keyway. We're at 67.04 currently at the moment. This, now look here, okay, see this little base here. Now I put this trend channel on quite a while ago, as you can possibly see. Now if we do a fib retracement, right, from here, no, let's do it from here. There is absolutely, why does that keep doing that? It's a study. Apply. And it gives me all of them. Now, we're seeing at the moment, okay, a reversal day in the Kiwi that we're not seeing at the moment in the Aussie. Okay, now we've got a double bottom here. Can you see that? A double bottom. Now look at this. This is really interesting. Yesterday, our RSI went up to the 30% level. Okay, now that was your first indication that the market was going to turn. It made yeah, but you've got to imagine something, right? I'm assuming that you all trade on a retail platform, okay? So if you trade on a retail platform, you've got to imagine that you're talking about a minor currency here, like the major currencies that everybody trades. You'll always, near enough always, get a price in it. Now something like the Euro Oz or the Euro Kiwi or the Aussie Kiwi or anything like that is what we call a minor currency. So although now the Euro Yen is different because it's a very actively traded market. But if you're looking at something like Euro Oz, Euro CAD, Euro Kiwi, you know, your spread is going to be wide, and also you can get hit on a stop where one's moved, the other hasn't, and you know, it can create all sorts of problems. Please don't think that if you're doing the cross, one nets another. It doesn't. These crosses move, and they really move a lot. So you have to be very, very careful if you're doing these minor cross rates. They're quite dangerous. Now, looking at this, if we take this out, I don't know how most of you trade, because to be fair, this list of people I've got that I can see, I haven't seen many of you before, but let's look at let's get that out of the way. Let's look at the hourly chart on the Kiwi. And we'll put a fib on here. So you can see with it the 32.8, 38.2 fib level. You see where we've based down here. You see where this gets down. So although we're overdone there and we've double topped, we can come back, as I've said to another group all today, we can come down around to the 66, 40, 25 support area before we go higher. So short term, we're seeing a little bit of a, or should be seeing a little bit of a pullback. That's obviously if we don't break the daily highs of 67.20. If we do, then these are going to change and we're going to go up, and we're going to be looking at the 67.80, 68 area. But does anybody actually look at the Kiwi apart from us on our little group? Do we? Do we have any questions again on the Kiwi at all? You are not very talkative today, any of you. Normally, I can't keep you quiet. Dollar yen. Would I buy now? What, the Kiwi? No, not at the moment. I've said where I'd buy. That would be around the 66.40, 66.25 area. The reason I wouldn't buy it now is because of it being overbought. I would, however, go in and buy it above 67.25. All right? Now, you might think that's really bizarre. It's like, well, why wouldn't she buy it now at 67.08, 6,700, and want to wait till it gets back down to 66.40, 66.20? When you go into a trade, if you're a technical trader, there are a reason why you would go in for that trade, okay? At the moment, the top side is holding. So all the while we hold below this level here, which was our daily high, we're right to want to be short and to be buying it back down towards here. Now, once we break that high, there's no reason for us to be short of it anymore, okay? Because there is a very, very good chance that the market will go higher. So I'd rather buy, it's not contrarian trading at all, it's technical trading. You buy into weakness, you sell into strength. The difference is if it breaks a daily high and you looks like overall on the daily chart that we're going to go higher, reference this one here, that's why you'd be willing to pay up and buy above the daily high, especially when you've got indicators like this. So that's why I'd have an either or. We used to call it OCO. Okay, I don't think they call that anymore on retail platforms. But it used to be one cancel as another. So you're either buying low or you're buying above the daily high. And if you want to be really, really convinced, buy above 67.40. Get that moving average out of the way. So somebody's just asked me for the dollar yen. Okay, I'll have a look at the dollar yen for you. Remember, the yen, though, is a bit squiffy at the moment because of all what's going on in the stock markets. So you have to be a bit careful with the dollar yen. I haven't had that one up for a bit on here. So at the moment we're trading at 121.07 in dollar yen. Okay. So we'll get away. Look how overdone we are. Okay. Now I personally thought today that the dollar yen was going to hold 121.5. That was my feeling when we opened this morning. Now it didn't. It's gone lower. Hasn't gone that much lower. So if we go to a daily chart, I'll put that on again for the candles for you, because I know you all like them. Everyone loves the candlestick apart from me. Silver, joint late? Yeah, you did. But just let me get the dollar yen out of the way and I might be able to go, I'll have a little go about the silver for you. Hold up. It's just, yeah, that's the thing. That was it. It certainly did. Now from the daily chart, that's not looking too fantastic, really. And I must admit, I did, but then I kept the stops really, really tight on the dollar yen because of this flight to quality that we've been seeing. All right, yen is very, very much correlated with the stock markets. Okay, so please, 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 please remember that. Yeah, we've just said what it is. The fun. Oh, I don't know about fundamental. I'm technical. I don't know. I'm sure there are a million fundamental reasons or people that give fundamental talks on FX Street. Sadly, I'm not one of them. I don't know about a fundamental reason. What I do know is, though, is that when the stock market goes lower, that probably is a fundamental reason, really. But, I mean, technically, that would be the reason. That is the flight to quality, which has made people go into the yen. It always happens, okay? Don't ask me why. It's the risk on, risk off thing. It's always happened. So there we are. That's what's made that do that. Now, where is the dollar yen going to go? I hope that weren't me, Tim. Flight to quality. Sorry, where's the dollar yen going to go? Well, we could, in actual fact, if we break and hold, not this blip below 121, but say we close tonight below 121, there's no reason, to be fair, why we can't come all the way back to here. 120.30, 120.50. I mean, depends on what the stock markets do. If the stock markets go as bad as what I think they're going to do, there's no reason we can't go down to 118 over the summer. 120, sure, not a problem. A bit longer term, 118. But we'll have to wait and see. We need to watch the stock markets very, very carefully. All right? Now, is there any other questions on the yen, apart from please watch the... well, yeah, Terry, they're all in it. Yeah, the dollar yen with, you know, obviously with Chinese stock markets and the Nikkei and the Hang Seng and all the Asian stock markets looking absolutely awful, far worse than our stock markets looking. That's the reason why. You know, everybody goes into the safe haven currency, same as with the dollar. The yen over there is the same thing, but it does have a follow through with the S&P. Now, I don't know, there's obviously a very good reason for that. It's just this risk on, risk off sort of thing. But yes, there is a good correlation between the dollar yen and all stock markets. Asian ones predominantly, but definitely the S&P and the Dow, without a doubt. So somebody asked me for silver. Ugh, well, no more questions on the dollar yen, or yes? God, you are really quiet today. Now, I don't know if I've got silver on here, to be fair, but I will have a quick look. And there you have it. Now, that's not going to be updated a lot because I've got to tell you, I very rarely look at silver. It's only recently so we'll take them off there. Okay. And we're going to go to a daily chart, I think, more. Let's have a look. See, I like bar charts because you get much more data in them. Yeah, you know, I think we can see quite a good retracement in silver if we go back and we look at that. And this again. Please watch the gold price. It's going to matter a lot. Where a long-term trade, well, I traded silver here. I'll show you a long-term trade. Let me show you a long-term trade. Silver. That was me. But I have to say we'd got in and, you know, we had silver at a very good level. Now, it collapsed there. I know this is a weekly chart, but that virtually happened within half an hour. All right. So from then on, I'd done my bit with silver. You know, I thought it was a brilliant market to trade. It had gone up a lot. Blah 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 blah. You know, are we going to go back and see the lows of silver? They're very, very low. But I think for the time being, you know, as long as we can hold above the 1400 level, I think silver's a good thing to buy. That's what that is. So, what we would be thinking of doing, we're trading around now on silver. We're at 1510. I think it's a very low risk to buy silver, okay? Down, even at current levels, buy silver, anything, 1510, 1500, and hold it, all right? A long-term buy, is that Dr. Bistra? Depends on what your interpretation of a long-term buy is. If you're talking a long-term buy for it to get back to 1773 or even 1700, you know, yeah. But even short-term, it's worth a buy, I think. 3 to 6 months. Depends on if gold can hold. That's what I'm going for. It really does depend on if gold can hold, and then it all depends on silver if we can hold this level here. Okay. And that was 1415. All right. And we saw that level back in December. So that's been your low. So I think silver's good, quite a good buy at this level, to be honest with you. I think your downside is limited. And when I say I've seen silver move like you wouldn't believe, trust me, $1 on silver is nothing compared to the day I saw that move. Well, I'd only gone downstairs to cook the dinner. I came back, thought I was seeing things, thought they put a wrong price in. But anyway, silver I think is quite a good long-term buy at the moment. And you know your levels of where to buy. Okay? You'd be buying at current levels. You could even put a stop below here. So you could put your stop like below 1500 or not 1500. You could put your stop below 1450, say for example, and then go in and buy it again. I'm sure I'm nearly out of time. I'll have to ask the FX guys. Am I FX Street guys? Am I out of time? Anybody there? Oh, you are more than welcome. Thank you very much. Well, I'm sure you've got someone. Yeah, I'll be back on there in 2 secs, Pete. I'm sure you've got somebody great coming up after you afterwards. All right. As always, it's been a pleasure doing the FX Street webinar, and see you all next month. Or am I there next month? Well, I'll see you all next month anyway. All right. Take care, and thanks. It's been really great today. Thank you. Bye.